All right. Well, welcome everybody. Thanks for joining us for our Wednesday evening trading Zoom. I always enjoy this call so much because it's the evening, everybody's relaxed, they've kind of done their day, and we dig get into the markets and we look for opportunities to trade using the dynamic edge. And when I first heard of dynamic edge, I kind of thought, oh, that's a nice name. Somebody thought up a nice name. That's great. I don't know if it's really that dynamic and if it really gives you much of an edge in the market. Guess what? It does. It's very well named. Having traded several different strategies myself, I am, I'll probably on almost a daily basis, I'm blown away by really what we have our hands on here with this particular strategy and with this academy. But for those who are brand new on the call, I am going to share my screen. I'm going to give you guys just a real quick overview, just so you kind of have the bird's eye view of really what we're up to and really what we're doing here. So I'm just going to get my screen sharing going here. All right, you can see my charts. Just going to, whoops, that's the wrong window. Got too many windows open. I have 3 monitors here, guys, including my phone and my laptop as well. All right, I'm going to give you guys a real quick, I'm going to keep this very brief, a quick overview of really what we do, what we're about, and really our why. So, guys, my name is Steve. A little over 2 years ago, I hit a bit of a low point because I realized my career, appliance repair, was taking everything I had and leaving nothing for my family. So I got in front of God and I said, God, I need some help. And it was literally days later, and my friend connected me with this academy. And you got to understand really where I was. I was at a place where anytime anyone talked to me about, maybe going and seeing a financial planner, maybe saving for retirement, anything like that, that would just be considered kind of financial prudence, like financial wisdom. Anytime someone brought a subject like that up, I would try to get out of the conversation as quickly as possible because it was a sore spot for me. It was an area I knew of my life that was out of control. And I knew that I was heading for disaster. So what I did is I tried to bury my head in the sand. So, but at this point, a little over 2 years ago, my friend connected me with the academy. He had just started learning himself, and I jumped in, and I'm so glad I did. It got me started on probably one of the greatest journeys of my life, because trading is amazing, but trading really, for me at least, has been 20% technical and 80% mindset. And it has changed me in so many different ways. You could ask my wife. It's brought me on this journey personally with God, where I've really had to really change the way I see things. But anyway, I've given more time to that than I expected here. So I Am Mastery Academy is an online academy that gets you going into a space where most people, where you're really, as a retail trader, you're not actually supposed to succeed here. But the academy is designed to make sure that you do. So it really is one of a kind. A lot of people think you can go to YouTube, you can, learn a basic trading method on YouTube and you'll become a millionaire. It just doesn't work that way. Like a professional sports player, a hockey player, we love hockey here in Canada, or whatever your craft may be, you've got to have a coach. You have to have a coach. And that's one of the things they understand very well at the academy. And they deliver that. I'd say there's just nothing else quite like it. So one of the reasons, though, that I jumped into the academy is once I understood these numbers here, I actually didn't know this, that I'm just going to draw. If you only see one thing on this screen, pay attention to this small little bit of text down here. It says 95% of the population has 5% of the wealth, and 5% of the population has 95% of the wealth. Now, if you've never heard that expression before, or that you've never heard those numbers before, let me explain it to you like this. The way most of us live, it's like 95 squirrels fighting over 5 nuts. And it gets ugly sometimes. It's called the rat race, or the squirrel race, maybe. 5% of the population, though, they have 95% of the wealth. And so that 5% is like 5 squirrels. They're very fat and they have 95 nuts and nobody's fighting over anything. So what we're about here, guys, is we're about teaching you how to join and become part of that 5%. Now, the lie that is told all of us ever since we're school age is that that 5% is something you could never ever do. The best thing you could do is maybe go and learn how to play basketball, and maybe you could become a basketball star and get paid really well for what you do. And that's just not true. That's not true at all. And that's what the Academy is all about. It was built by a gentleman named Chris Terry, who became part of the 5%, but realized it was so difficult to break into that 5%. He wanted to build an academy so that normal people like him, because he was from the street, normal people like him could actually do that. And that is why I Am Mastery Academy exists. So now the Academy, what we're going to be doing tonight, guys, is we're going to be trading in the world's largest financial market. Some people are saying, oh, the stock market, right? No, not the stock market. The currency market. The stock market trades in the billions. The currency market trades $8.6 trillion per day. And this is, why would you trade anywhere else? You want to be in the largest market possible. It's more liquidity, more movement, and it's easier. Technical indicators work better in this market. So this is a little look at the education in the Academy. This is an area of the Academy that's very familiar to me. I've spent lots of time in it here. We have the go live. We have the strategies. We're going to give you a little bit more on that. You're actually going to get to see some of that in a moment here. This is the 100 series here. The 100 series is great. If there's anyone on this call with us right now who, in a few minutes, when I show you my chart, you look at the chart, and this was me. This was me 2 years ago. The first time I saw a financial chart, I thought to myself, you know something? I'd probably be better off to try and go and learn Greek, because this is ridiculous. And that's what I thought. And I jumped in because I really was desperate and I started to learn. And I remember in the first 24 hours, I realized, oh, I could actually do this. And after a week, I was like, I'm doing this. This is setting me free. And here I am now, 2 years later. I guess you could say gainfully unemployable. It's pretty amazing. So I spend my time instead doing things for the kingdom of God and for my family, and not as much for money now, which is just such a blessing. So DCX, guys, DCX. The DCX Academy is a whole nother section of the I Am Academy. It is devoted to teaching you how not only to stack up a beautiful fat crypto portfolio of cryptocurrency, but also how to trade it, how to stake it, what decentralized finance is, and how to rise to the top of that space, how to build your own NFTs. And if that just sounded like a whole bunch of Greek to you, then don't worry. If you're curious about that space, that is probably the most, and that is one of those spaces, kind of like, back in the day, before Amazon.com, right? There was nobody bought anything online, right? And so a lot of people looked at it and thought it was a joke, and they're like, I'm not risking my credit card to an online website. Well, everybody does now, don't they? And nobody really knew what it was going to become, except for maybe Jeff Bezos and a few elites. So the DCX Academy teaches you guys how to really get into the financial space, into the crypto space, into the DeFi space, because those of us who have a little bit, just even a little bit of education in that space right now, could become millionaires tomorrow because of it. There's so much opportunity there. So now, speaking of e-commerce, COVID, everybody buys online. If people didn't buy everything online before, they certainly do now. So we have a separate academy devoted to that, teaching you how to build your own e-store. Now, you could probably go to YouTube and you could probably get a video or two or a whole series of videos, or you could even buy a course for somewhere on YouTube, maybe, where they'll teach you, oh yeah, you go in, you click this, you do that, you find some stuff and you put it up there and hope someone buys it. So again, the difference of what we do here at the Academy, guys, is we connect you with live coaches through our platform called Go Live. So that's huge. Now, if you're going to go build an e-store, you're going to need to understand trends. You're going to need to understand what people are interested in. You're going to need to understand how to get the leg up on Amazon or whoever else, And that is exactly what we do. We have an educator in the ECX Academy who is one of the world's best in that space. And as his students, he gets on Go Live weekly, and he'll actually go through your e-store for you. So we have a lot of people who have e-stores that are making a lot of money. So that's something, if you want to look at it, you could look at tonight. We're not really going to be talking about that. We're going to be going into trading. But one of the things we're really big on here at the Academy is multiple streams of income. Now, the ECX Academy brings you into an area that is truly passive. Your income is truly passive. You set the store up once, maybe go in every once in a while and maintain it, change a few things, and people just keep clicking your links and buying your stuff. And you can even set it up so your phone goes ding every time you make a sale. I mean, that feels really good. So that is pretty cool. I actually don't have an ECX e-store. I want to do it one of these days, but I'm just so passionate about trading, especially dynamic edge, that I love it. I do it 2 hours in the morning, and then I go off and spend the rest of the day with my family and doing stuff. Took my son Asher out for a date today. We went out and had poutine, which is a big thing here in Canada, and milkshake at A&W. He just loves it. He's almost 4, so that's a big deal for a 3-year-old. Anyway, go live. This is now, I don't know if you have a big monitor. If you're looking on your phone, you probably won't see this, but you see these little heads here? These are 4 of the almost 200 educators that we have here in the Academy. And what's really cool is you click into Go Live and you can actually see when their mentorship sessions are on a calendar. You can pick one that you want, and each one has their own flavor. They have their own strategy they're teaching. Usually on one strategy, you'll get 3 or 4 educators that teach it, and they'll come on at different times, because it's all about making sure that you have time to learn and become profitable in your spare time, because no one is going to quit their job immediately, right? So you've got to be able to do this while you're working. So yeah, almost 200 educators, guys. This academy is huge. It's almost 500,000 students globally now. Mindset. I said earlier in the call that trading is 80% mindset, 20% technical. At least that's how it's been for me. And I've heard a lot of other people say the same thing. We have an academy devoted to mindset, the MMX Academy. Absolutely amazing. And I have learned so much from these 2 gentlemen here on the screen. Tools. Now, if you were to go in and start trading without any indicators, without any tools, without any AI or artificial intelligence, that's kind of like, why would you do that? Like, why? When you can actually have a computer do some of the heavy lifting for you, because humans are never as good as computers at, popping up and recognizing patterns. It's amazing what computers can do. So every professional trader uses tools. So of course, at the Academy, what do we have? We have tools, and we're going to show you just one of them tonight. Really looking forward to that one. We're going to show you the dynamic edge strategy, which is built on the pivot scanner. We'll have apps, trade ideas. As a new trader, it's pretty fun to be able to actually get a trade idea from a professional trader. And of course, we have almost 200 of them, and they push out trade ideas through an app, through a smartphone app, which is pretty amazing. I don't actually take those anymore. I like to trade on my own. We're about creating independent traders here at the Academy. But when you're getting started, I mean, how cool to actually make a few dollars doing that. So I am going to jump out of this here. I'll close this window because Chris and I really want to get to the charts. We've been looking at a few things. Chris, please do interrupt me.
Yeah, they're setting up for a sell on USD JPY.
On UJ. Okay, let's okay, guys. So part of what we do here is we actually live trade. Oh yeah, here we are. Okay. Oh yeah, divergence. Beautiful. Okay. What now, if you guys have actually got your demo account open up the currency pair USD JPY. You'll see it over here on the right side of my screen here, and prepare for a sell. Now, Chris, again, interrupt me here if you have anything you want to add to this. But Chris and I have been watching this because Chris has been watching this. We're seeing something on the screen here. It's called divergence. I'm going to amplify my MACD a little bit just so that you guys can see this. I'm going to go from here. And really all we need to do is go to this peak here, but we could actually draw. Okay, here we go. Starting to drop now.
Yeah, it's not quite there yet.
Not quite. Yeah, almost.
It's approaching the hopper.
Yep.
If it crosses that middle BB.
So there's something we're looking for. What we want to do is we want to sell when we have a red candle come and close below this black line here. We call this the middle BB, or middle Bollinger Band. You'll notice how the candles are inside of a tunnel here. These tunnels are called, this is called Bollinger Bands. It's a very common indicator, very powerful. But what we're looking for is we're looking for a sell hopper. Now, a hopper happens, and this is kind of this term hopper is kind of made up by our educator James Leone, which later we've got to make sure we show everybody James's go live before we get off here. Chris, James is amazing. But yeah, James has kind of coined the term hopper, and what it means is it means that this blue line here crosses below the 0 level on the MACD. Now, this indicator down here is called a MACD. I'm just going to put a line here right on the 0 level. You'll notice if you look to the right of my cursor, you'll see how it says 0 there. So this is kind of like a horizon. So when the blue line crosses below this line here, that indicates the market is going to go down. So right now, it came down a bit. We were hoping it was going to come further, but it's gone back up. You know what? We haven't lost a cent, not a red cent. You know why? Because we didn't enter a sell yet. It's not ready. And that's perfectly fine. Nothing wrong with that. So again, though, we see a disagreement, though, between the trend on the MACD. The MACD is going down. It keeps going down from green, 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 and it's actually sunk below the horizon. And it's now it's creating red bars here. And yet the candles here are not really doing that. They still look like they want to go up, actually. See how it's making green candles? So this disagreement is called divergence between the candles and the MACD. So we're just going to let it do its thing. Maybe it looks like that. It looks like it's making more divergence. It wants to go up. Look at this. See? And actually, if it comes up and hits this pink line, that's going to put us into a really good position. Look at this.
Burpee.
It's gonna, yeah, you're right. Purple line. Sorry, not pink line. Pink line's down here.
Well, it was just at it was that all that back and forth with those candles there was right at big round number at 129.
Oh, yeah.
So was expecting a rejection there, but now that we've broken through, but it could still reject here.
Yeah.
There's still more divergence.
Yeah, there is. Yeah, we're just gonna have to give it time. We thought it was looking like it was ready here, but it wants to keep going for a little while. So that's okay. A trader, as traders, we watch for opportunities, kind of like imagine a tiger crouching in the grass, and he's waiting and he's waiting. He's waiting for the prey to come along and get in just the right spot. And then the tiger jumps out, right? So the tiger hasn't exposed himself to any risk at all as he's laying in that grass. So we're kind of like the tiger right now. We're sitting in the grass and we're waiting for the right time to pounce on the market. So while we're doing that, Chris, I want to just show everybody what happened today.
Absolutely.
Yeah. So let me show you our market open. So in the morning, we actually do like to trade something called an index. So we're not going out and buying and holding stock or anything like that. But there's an index, and it's called, and it works a lot like a currency pair, but it moves based on price data from the stock market. That's the one we like to trade. It's called the NAS 100, the NASDAQ. So, well, this here was a big one. I got in on this one right here, sold it all the way down. Let's see how many pips that was. Right, I got in right down here. I think I took it just to the blue line, so that was about 72 pips. I believe that's how far I took it. It actually had a lot more. I got back in again. I think around here, or it might have actually been here when it came back and retested the bottom of this blue line here for another 50 pips. And that was all I needed for today. Really all you need to be able to compound your account by 2 or 3, maybe 4% a day is you need about 30 pips a day. So today was an exceptionally good day. We get up in the morning. We start 6:30 a.m. Pacific. You'll see at the bottom of the screen here, my cursor there actually has the time, and that's in Pacific time. And the algorithm called the bearish movement. You can see right here at market open at the 6:30, just before the 6:30 candle, it actually called it. So if you click the button as soon as you saw the red arrow and just caught all of this, you would have had the whole move was 170 pips, which is many times what you really need. But hey, extra money, why not, right? So the dynamic edge strategies is a couple things I want to point out, guys. These candles are 1 minute candles. See this little 1M here on my screen? Okay, so now this is really important because you get into trading, most people will learn to swing trade. So when you're swing trading, these candles are at the very minimum 15 minutes it takes to make a new candle. So you're sitting on your screen for a long time. So like to catch a move like this, if you're swing trading, is, let's see, that was 5 candles. So let's say it was an hour, 15 minutes. That would be as many candles as you get in an hour. That's an hour of sitting on your chart to try and get a decent move like that. What we do here, that was 5 minutes and we're in and out. Most of our trades were in and out, usually in under 10 minutes, usually around 5 minutes. This is huge. That is so key, because what we're about here, guys, and what probably everybody who gets into trading is looking for is they're looking for freedom. They're looking for time freedom. So, I actually had someone ask me way on the beginning when I was just getting into trading, they said, wait a minute, you're just buying yourself another job. You're going to have to sit on a monitor or sit on a screen for 8 hours a day. And at the time, I didn't really know what I was doing because I was brand new. And I thought, oh, yeah, good point. Well, guys, you know what we do? Chris and I, we actually host or Chris does, a Zoom call in the morning, 6 a.m. And we get off around 8:30. We actually stayed on till 9 this morning because it was really fun. We were having a good time. But most people get on our call and they'll get their pips and they're done in about an hour. And that's about it. Some people who are just really having fun and they don't have a job to go to, or maybe they can go to their job late, they'll be on for 2 hours, sometimes 2.5 with us. But most people are gone in about an hour because that's all you need. Now that's huge. If you can do that every day, Monday to Friday, and compound your account by 4%, let's say, for example, that after a year will put you in a very, very different place financially. So that is what we're doing. And part of why I love Dynamic Edge is because we're scalping. We're not swing trading. And we can take these little tiny moves and we make just as much money in 5 minutes as a swing trader will make in, sometimes 6 hours. I remember swing trading. I remember that. I'd be constantly checking my phone to see if my trade was still in profit and worrying about it and stuff. So that is huge. I absolutely love this as a scalping strategy. Now, guys, something really big happened today. We had some news. I'm going to scroll up and I'm going to show you the news. Where was it? Oh, by the way, may the 4th be with you. What time was that big news that came out, Chris? It was here. It was right here.
It was about 10 o'clock.
11 o'clock Pacific. Fed interest rate decision. Okay, high impact news right here. And we check the news every day. We just check this website, tells us if there's any big news events coming. Look, guys, at what happened. So the interest rate decision, that whole thing started at 11 Pacific. Okay, let's go to the charts. Let's look at what happened. And I knew this was going to happen. I knew it was coming, but I'd already got my pips for the day and I was busy doing stuff with my son. But I wanted to change my whole day and sit on the charts all day because I knew this was going to happen. Okay, so the market moved how many? 170 pips this morning, right? Take a look at this. Okay, so first of all, look at the cursor. 11 a.m. Pacific is right there. Okay, so now here is where the marketers, the traders are all waiting until they actually know what the interest rate decision was. So 42 minutes later, it goes off like a rocket. Okay, now here's what's beautiful about it. I would have taken this trade. Some people will say, yeah, well, it's fun to look at it. You can scroll to the left. Like, yeah, you're looking at it after it already happened and you can be a genius, right? No. This is a perfect rejection of this blue line. Now, those of us who are dynamic edge traders, this is called the S4 line. When we get a rejection off this S4 line like this, we click buy because we know what's about to happen. And look what it did. I'm actually going to measure this move out, guys. So I want you to see this. So I would have entered right here after the arrow, right there is where I would have entered. And there's a couple spots where I could have exited. I would have gotten out here and then back in, but I would have captured probably most of the move. I want you to see how many pips this was. And we're actually going to go not all the way to the top, just up to here. 438 pips.
Sheesh.
Guys, the NASDAQ went up 438 points or 3.35%. Now, when you're trading this, that doesn't mean your account grows by 3.35%. That's probably more with the way we trade. That's probably more like a 30% growth for Chris and I, the way that we trade Dynamic Edge. That is huge. And those don't happen every day, but this was what I want you to see is that this was 100% predictable right down to the hour. We knew that the market was either going to go up if the news was good, or we knew the market was going to go down if the news was bad. Now you're saying, okay, well, from the news here, you couldn't say if it was going to go up or down. It doesn't matter. I have indicators that tell me. So I sacrifice. Okay, so let's see. Once the market actually started to go, I sacrificed about 100 pips out of a 600 pip move. So, you don't have to get in right away. The indicators all line up and you just follow the rules, and the rules with Dynamic Edge are very, very, very strict, which is what saves traders. That's why people do so well with the strategy, because the rules are extremely strict and extremely rigid, which is exactly what a trader needs when you're trading a MetaTrader account. So yeah, Chris, it was a good day. And I didn't even get this move.
Can you point out the divergence?
Yeah, for sure.
That move.
Yeah, so on this move right here, we did not have divergence. We did have divergence from way back, but we actually didn't have it. We didn't need it. Unless you can see something I'm not seeing here.
Yep. So there was bearish divergence. So you can see the bearish divergence right there. Yep. From there to up over to your previous peak.
Yeah. Oh, yeah. So that's what pushed us down.
That's what pushed you down. And then it looks like it's equal distant on the bottom. From that peak to your other peak. It's pretty close.
Fairly
close.
They're in agreement, but the big thing that happened here was the rejection of this blue line.
Yeah.
So what we watched for, and I'm going to zoom in so you guys see this. And again, for those of you guys who are new, and if you're looking at all these lines and you're going, oh, guys, this is Greek. Please. Okay, I'm just going to talk to everyone on this call who is like, this is Greek. Yes, you're right. It is. But it's easy to learn and it doesn't take long. I was diagnosed with ADHD as a kid in school, and I have had to work probably about 4 times harder than most people to learn anything. And I remember how good it felt when I started to pick this up, and it literally happened in under a week. I started to pick up and understand some of this because the academy is so well laid out that you can start from knowing absolutely nothing, not even understanding what this green bar is with wicks on the little spikes on the top and bottom. You don't understand that? That's fine. The academy will teach you that. And if you don't need it, you can skip over all that and get to what you want. So it was the rejection of this line here, Chris, with this bullish engulfing candle that really, and then the cross here of the mid Bollinger Band, and see how quickly. Outside. Yeah, exactly. PSAR outside, bands expanding, rejection of the line, boom, away you go. So, and if you didn't want to, if you missed this, you could get in here off of this rejection here, right there. So there's so many opportunities. The strategy gives you a tremendous amount of opportunity to be able to really capitalize on this market. So pretty cool stuff. So that is kind of a quick little review of the day.
That was awesome, Steve. Thanks, buddy.
Oh man,
I just jumped on.
awesome. Well, here's the other thing, Chris. Look when this happened. This was not in the middle of the night, guys. This was, for people on mountain time, this is lunchtime. This is your lunch break. So, on lunch, you could have at 12:45 here. I'll just change my time zone to
Go to Denver.
There we go, Denver. Change my time zone. So now here we are, lunchtime, right here, and this Fed rate decision is coming. So you're sitting on your charts, you're watching, and then you see things line up. You could take a little sell here, maybe, and then you see this. You see this rejection of this line here, and where this thing's going. It pops up above the mid Bollinger Band. You get the arrow. You get the hopper right here. Right? See this blue line going up above the zero level right there? You get the hopper. You get this big green candle that punches through. Look at that. I mean, beautiful. You could, if you're a little late, you could buy it right at the top of this red candle, right as the green crosses up. That's another spot where you could buy it.
UJ's ready.
Oh, UJ's ready. Let's go. Okay. There it is. Oh, beautiful. Okay, I'm selling that.
It's having a hard time breaking back down through the big round number.
It is, yeah. It's struggling there, the big round number. Yep.
It's going to go, though.
Yep. We'll wait. We'll wait till it does.
So we've seen a clear rejection of that S1. After our divergence.
Yep.
PSAR's outside. It's in the proper sell mode. Approaching a hopper.
Hey, Chris and Steve.
Yes, sir.
When you guys are looking at this, do you see the bearish divergence that might be happening though? So it might be a short sell or no?
You mean the bullish divergence?
Or bullish divergence, yes. See, I pulled a Leland there. I apologize.
Yep. No, I see that for sure. For sure.
Yeah. So one of the things that's really important here, guys, is that, there's really going to be two basic results of your trade, or three, really. You're either going to have a nice big win, or you're going to have a small loss, or you're going to break even. And those are your three results. And so as a trader, you have to understand that there are going to be times where you're going to enter a position and it's going to hit your stop. And you have to be okay with that, because another key part of the dynamic edge strategy is risk management. And risk management is huge. If you don't have proper risk management, good luck ever trying to make money in the market. So one of the things we do here is we make sure that our stop loss is always closer than our take profit. So if you can imagine, I'm actually going to draw up a short position here. There's our arrow. Okay, so the red part of this represents our stop loss, right? So now the PSAR here is these little black dots. You can put your stop there, but I don't do that. I'm going to get out if it goes above this purple line right here. So you'll see my stop is very narrow. My target is the pink line. So now you'll see here, it actually tells me on this little calculator that, see this risk reward ratio? See how it says 2.27? That means that the green part here is 2.27 times larger than the red. So now here we are, we're just about to target.
There's your target.
I'm taking profit right now.
I'd put target down to S2.
Okay. And I don't have the Camarillas up right now. Let me just zoom back out and get them.
It's at target.
There it goes. There we are. I just took my profits right there just to be sure, but because
that's a beauty trade right there.
Yep, it was good, wasn't it?
Yeah.
And this is what we do all morning, guys. It's a lot of fun. So, But if this had gone against me, look how small that little red section is there. And if anybody didn't get this, you're late. Don't worry, we'll find something else. But I got that, and I'm happy. And now it's coming right back.
Just testing that big round number.
Yeah, I think you're right. That is a retest. You know,
Looking for that MACD scalper.
Yep. Oh yeah, it still wants to go down. We'll see. We'll see how much further it goes. It probably is going to end up down here. These lines here, see it says S2 here. These lines are called Camarilla lines, and they're another part of the strategy. It's an advanced part of the strategy. When you start as a new dynamic edge trader, you are not going to have these on your chart, and we'll help you with those later when you're ready, because we want you to master the fundamentals first. And I guess fundamentals is probably the wrong term to use, since that has a totally different meaning in trading. Okay, so that was a nice successful little trade on UJ, USD JPY. I was in for literally less than a minute. That's called a scalp. And you do maybe 2 of those in a day, and you have paid your bills. Maybe 3. Now, we like to trade. There are times when markets will tend to really, really trend. Like right now, you'll notice how these bands here are pretty close together. The Bollinger Bands. Let's see how many pips we got between them here. We've got only, well, now even less. We've got about 8 pips between these 2 here. So yeah, I wasn't expecting a lot out of it, although that was pretty good. So when you trade during times when there's more liquidity, now notice this over here. Notice how much movement there was in the market here. We had a really nice move. Let's just measure this one move. That was 26, basically 27 pips. But notice how much distance there is between these Bollinger Bands. So if we measure the middle of this move from the top blue Bollinger to the bottom, that's 40 pips between the 2. That gives you just a little bit of an idea of what the market's capable of at that time. So you have an idea of expectation. One problem a lot of traders have is that they don't really know how far the market's going to go. They're just like, okay, well, I don't know if I can expect the market, what it's going to do. Is it going to reject right away, or what's it going to do? Well, we got you covered for that, a dynamic edge. That's why we call it gives you that dynamic edge that you need to consistently pull money out of these markets. All right. Well, that's set up nicely. Thank you, Chris, for that. That was beautiful. We got rejection of a line now that my Camarillas are on. Look at that. And of course, it just sails right down. Arrow, boom, profits. Now, if you were trading a broker that has a big spread, you probably didn't make any profit on that at all. I trade with a broker. I'm not allowed to advise a broker. I guess I could say a demo broker you could use, but I would not. None of this, by the way, guys, is financial advice. We're not financial advisors. We're just traders. We're actually your fellow students. And everything you learn is not from us, it's from the academy. But there are brokers out there that don't have a spread, so you can trade, you can scalp like this on currency pairs. And that's what I did. Like, I was immediately in profit. So that if you're trading with if you have a demo account with a broker that has a big spread on currency pairs, you probably didn't even get into profit on that candle. Let's see how many pips that was. Oh, 4 pips. No, you would have gotten in profit. Yeah, no, you would have been all right. Probably by the time I got out, maybe you would have just barely been in profit. So, all right. What else have we got? Okay, Euro USD. Oh yeah, we do have some bearish divergence as at now. We'll see if this thing actually does anything. I'd like to see it come up and reject a line. That'll give us a nice sure trade. Let's go to the 3-minute time frame. See what it's doing.
UJ's still going.
Is it? Oh, it is. Look at that.
You wouldn't even have been stopped out either.
No, it's true. And this is very often what you get. Um, the market will break a certain level. It'll make a big, huge candle when it does it. And then it's like it wants to come back and retest it just for confidence before it goes again. So it's like this break, come back for a little kiss, and then boom, back down again. That's a very, very common pattern we see in the market. And what happens, it's really, really fun. Your eyes start to learn that. Your brain recognizes that. And after a while, it decodes this just like a just like someone can, a young child can decode Chinese characters really, really quickly, where, I look at Chinese characters and I don't even know what I'm looking at. So thankfully with trading, you learn it a whole lot quicker than you learn a new language. Let's see if it rejects the mid Bollinger Band. Now, guys, there's a reason this line here is black. It's a really good reason for that, because this line carries a lot of authority. I want to point something out. Look at this. Bunch of sellers figured, oh yeah, we're going to go ahead and drive the value of this down here. We're going to start selling. All of a sudden, boom, they hit this line and back it. Look at how it rockets up. It's like the buyers were waiting down here. As soon as the buyers saw the sellers had driven it down, they're like, joke's on you. And they went ahead and bought it up and boom, created a higher high. So there's something about this line, this mid Bollinger Band, that's very, very powerful. Sometimes if the market's coming up with a lot of steam, it won't respect it at all. It just blows right through it. Here it rejected it first, and then it blew right through it. But here it wicked right to it. Little wick, boom, right back up. Another again here and again here and again here, and then it finally broke it. So it's kind of like it takes multiple swings of a hammer to smash something, right? And so it's the same way in the market. It's amazing watching it. It's fascinating. Yeah, this market's turning around, Chris.
Yeah, totally.
I think this little uptick it did here is short-lived. Let's actually throw a Fibonacci. So another thing I want to show you guys is the market moves in waves, and you can, and just like the ripples when you throw a stone into the water. And that's all math. It's all math. It works with the Fibonacci sequence, right? Okay. So I want to show you guys something here, and I hope you can. Let me see if I can get rid of my Camarilla levels right now here. I'm just going to delete the Camarillas. There. We get the market, just get this a little bit cleaner. So if you can look at these lines here, notice that each line has a level. So this is classic. What we did is we drew this Fibonacci retracement from the very top of this whole move down, right to the very bottom. Now notice something that happened here. It reversed down here. So we know that this has already happened. So we've drawn from the top to the bottom. Now watch what happens. It comes up and it makes one little wick to this 61.8 level, and it crashes. This is probably something Chris did, and he just didn't say it because he didn't want to confuse you guys. But this is what happens at the 61.8 level. So this is 61.8% of this move, where this is 0%, this is 100%, right? Actually, this is 0% down here, this is 100% up here. But on the scale, 61.8% is where markets will turn around. And it happens over and over and over and over again. And so when you can predict this, and then you add in a few other confirmations, very powerful confirmations to confirm it, you now have a strategy where you can enter the market every day. You can win more trades than you lose, and consistently pull money out of the market without sweating and being all afraid and feeling like you're gambling. Because this is not gambling, guys. It should be obvious by now. This is very calculated. It's very rules based. It's very rigid. And there's no kind of clicking the button because you thought that maybe the market was going to do something. So yeah, I love that little 61.8 retracement here. And now we're gonna see what it's gonna do next. This is on the UJ. So this is the larger move. So I think once it breaks below the mid BB on the 3 minute, Chris, we're really going to tank. So that's what it's been struggling with here. So I'm going to go back to the 1 minute. And yeah, I think this is gonna, it's got more movement. Let's see, did we go into a hopper on the 3 minute yet? Not yet. We're getting close.
Not yet. Close.
Not yet. Yeah, it's coming. It's coming. Does anyone have any questions about the strategy? Is there anything that we can answer for you as Chris is looking for more opportunity for us and as I am doing my usual chin wagging and talking and talking and talking and talking? Let me just open up the chat. I just realized if anyone's asking in the chat, I'm not seeing it. Okay, there we go. Okay, I'll leave that open if anyone does have any questions. Oh, awesome, Isabel. I'm glad you're enjoying it. That's great. Isabel says, learning lots by listening. Thank you. Get my Camarillas back here. By the way, for those of you who are, there it is, who are putting Camarillas up on your chart, you sometimes have to zoom all the way out to the, so that you're at the beginning of the trading day, and then the Camarillas will paint, and then you can zoom back in again. All right, let's start looking through the currency pairs here. So our favorites are USD JPY and Euro USD, but we are open to looking at others. Are you seeing anything, Chris? Actually, either Chris. Oh, thank you, Mr. Lloyd.
I'm on my phone and I got like 3% left, so it's gonna die. I can't look at the charts for you. I'm sorry. I wish I could, boys.
No worries, my friend.
Watching, I think anybody who watches this later or watching this now, you're doing such a great job, Steve. And I like that Chris just sitting back, giving you some spots to look at, and then you're going away, run away. You're doing a good job teaching, bud. Keep it up, all right?
Oh man, thank you, my friend.
No worries. If my phone dies in 2 seconds, because it's down to 2%. I gotta go charge it. I want to thank you guys, man. Keep it up, all right? I'll be on next week.
Awesome.
All right, you guys take care. Way to go, Isabel. I'm glad you're enjoying it. Love you guys. Bye-bye.
Thanks, Chris. Always an encourager. Appreciate you, brother. Look at that. We got us a buy hopper, UJ. What do you think of this one, Chris, Mr. Leyland, sir?
Yeah, there's a lot of resistance at the top, though. It could
Yeah.
it could just be bouncing up and down. Those bands are pretty flat, so
Yeah.
you know that what we were working with could have been a possible breakout.
Yeah.
You know, that's kind of what we would have expected, but
Yeah.
you know, either way, we caught some pips there.
Yeah.
That would have been about 5 pips. 5 pips, pretty good, especially on a currency pair.
Let me see how many I got.
But yeah, you could definitely throw in a buy. You know, I'd have finger on button. But yeah, mid BB's between Pinky and Perpy, so I don't think it's gonna go anywhere.
I got 5.5 pips out of that move. I was just looking at my chart, and I leveraged it properly, so I made out like a bandit on it.
Brilliant.
Yeah, so this sort of a market, guys, is something that I'd say 99% of trading strategies would look at this and say, you can't trade that. You can't make money in that. That's just garbage. Yeah? Think so, huh? It's the beauty of the dynamic edge is we can take these little snacks, little bites of the apple. And sometimes it's a really small apple, but you can take a little bite and you can make your pips, you can make your profit. And it feels really, really good to be able to make money in a market like this that swing traders certainly won't. Swing traders hate this. just jams them up, and they usually end up getting stopped. And, I'm not saying swing trading I'm not saying anything's better than anything else. I'm just saying that this is why I love this strategy and why I'm so excited about it and why I'm so glad to have you guys on with us tonight. Yeah, I feel like Chris, when this finally does push up and give us a hard rejection back here at, this would be S1, this yellow line. We've got also a dotted, we got a higher level EMA right above it as well. That's what these dotted lines are, guys. These are also lines of support and resistance, but they're dynamic, where these are solid lines of support and resistance. So this is an area of great interest for me, just to see what the market does when it gets into this zone right here. I expect it will reject and go back down. So I would love to see at least back down to structure. Really, I'd like to see it come all the way back down here to, what is this? I changed my colors recently, to S2. So that's what I'm looking for on UJ. What about you, Chris? What do you think? Is that make sense?
Yeah, totally. Yep. It's
So
just gonna faff around.
Yeah.
It's probably gonna pop back up to that S1.
Yeah. So now I'm looking at the euro versus the USD. So euro USD. This actually seems to have stronger legs in it right now.
Yeah.
Oh, we did have divergence up here.
Draw a fib up on that one.
Yeah. Let's see here. Just about down to 382. Interesting. Okay. Yeah, that's not quite ready yet. The PSRs are out, the bands are narrowing. We do have bullish divergence though. So it's possible we might reject this hopper coming up here. See the bullish divergence? I'm going to draw this up for everybody so they can see it. Okay, so notice these two peaks here. This one's lower than this one. And this one, and the candles went completely the opposite direction. See that?
Yeah.
So that is called bullish divergence because it's on the bottom of the MACD histogram. And the MACD histogram is referring to these bars. So if you're drawing it from red valley to red valley, then what that means is it's bullish, meaning that it's indicating, yes, we're down right now, but we're probably going to go back up. Now, what it doesn't say is, it doesn't say it's going to happen immediately. It says at some point, the market has kind of, it's almost like the bulls have got a bullet in the chamber, and we don't know when they're going to fire it, but we know it's going to happen at some point. So we're looking for an opportunity, something that's going to cause the bulls. When I'm talking about the bulls, I'm talking about the buyers who are going to drive the price up. So the buyers have got, it's like the gun is cocked and loaded, or loaded and cocked and ready to go. We don't know when it's going to happen. Now this red arrow, no, not touching it. It might go down. It might deliver pips, but I want high probability pips. We don't take this. Couple of reasons why. First of all, we have bullish divergence. Secondly, see this black line? Look at the clock angle of this black line. See how it's pointing up? We don't try and sell when this black line is pointing up, because the probability of it doing that, it might do it, but the probability is lower. So I'm quite happy to go ahead and let it. If it wants to tank all the way down to here, go right ahead. That's fine. Just do what you have to do. I'm going for the high probability pips. So, I mean, these arrows are very, very powerful, but because it has gone in, and it is a sell hopper, but it's probably going to reject this pink line. If not this pink line, it's probably going to reject the purple. And what we're interested in is taking it back up for a buy. So we're just going to watch it, just like the kind of like the predator, the cat, the lion, the leopard, crouching in the long dry grass in the African savanna, waiting for the poor unsuspecting prey to come along. So that's kind of like what we're like. We're like the snipers waiting. We've got the scope out and fingers right beside the trigger, just waiting for that moment when it's right to go ahead and take your shot. Sorry about all the negative killing analogies. Must be a guy thing. I don't know. Okay, so we're waiting for that to reject and come back up. That could actually happen pretty soon here. I'm going to click back to UJ. UJ here, and when I say UJ, I'm talking about USD JPY. Looks like it's moving very, very slowly. Markets are a little slower this time of evening. You can still get your pips. It just takes a little more patience. You know, you're not always going to get that. That happens usually. Yep, same thing. Like clockwork, right around dinner time for us. So yeah, right around dinner time, you usually get a nice move on UJ or Euro USD. So I want it to come up a little higher. It comes up here, and then we're in a good position. And this I want to come down here and reject. Somewhere in this zone here. I'm going to turn this, change this square. Whoops. Change this square to green because I want it to be all about buys. Okay. Anything else, Chris? Maybe I'll open another pivot screen and start clicking around. See what else we can find. Well, we're almost 8 o'clock. We're just about done.
Yeah, I was just kind of concentrating on UJ. But I liked what you were doing with Euro USD. That was nice.
Euro NZD is really trending nicely. Look at that. I wonder if that's Euro strength or NZD weakness. It's a nice move.
It is nice.
27 pips. That's like 270 pips on the NAS.
Yeah.
Yeah, currency pairs don't throw as many pips, but that doesn't matter. That's just as profitable. Yeah, you know, let's get the Camarillas on this one here. Euro NZD.
Steve, I think there's a question in chat there.
Oh. Yeah, good question, Dave. So Dave is asking, is IAM part of Dynamic Edge or are they two entities? So IAM is the academy, and the academy that has over 200 educators in it, or just under 200 educators. Dynamic Edge is one of the strategies that is taught by one of the educators. So, you know, the thing I love about IAM is that there's so much happening under one roof. So I started with another strategy back 2 years ago, and a lot of people made a lot of money with it. I just didn't like it. It just didn't work for me. So I switched to a different educator, and I'm so glad I did. You know, I'm so glad that I didn't go and pay the going rate of about $10,000 to take a trading course from a YouTuber. That's typically, if you go on YouTube, what you'll get is you'll get some, you know, some partial information. They don't give away all their secrets, and that's fine. You know, I mean, that's totally fair. And they want you to buy their course. Some of the courses, if it's a really cheap basic course, it'll be maybe $2,000 or $3,000. If it's a proper course that will really give you something that theoretically should get you profitable, it'll usually be minimum $10,000. But the problem with that is now you're stuck. You're stuck learning this strategy because you paid 10 grand for it. So you got to get your money's worth. So yeah, with many words, I hope that answers your question there, Dave. It was Isabel. Yeah, we do discuss crypto. Not too often. We have a whole academy devoted to crypto, and we have a whole bunch of educators. I'm just going to show you guys the go live here. Log in here. Now, I don't have a DCX subscription because one of the things we want you guys to do is to focus on one strategy at a time. This gentleman here, Curtis Cobain, he's one of the most popular DCX educators. This guy here, this is Crypto Picasso. His name's Dave, by the way. Crypto Picasso is probably one of the longest standing educators in the crypto space. He was in Bitcoin back when even some financial institutions didn't even know what Bitcoin was. So he is incredible, just amazing. We're probably one of our best. So really grateful for him. So this is the leaderboard of the educators. This is Mike Sotero. Mike Sotero is very strong in the DeFi space. So if you want to learn more about decentralized finance, he has a DeFi bootcamp. Yeah, and I don't have the subscription for it, so I can't actually go in and show you his classroom. But I'm going to show you in the FRX Academy. I'm going to show you James Leone. And here's when he's on. He's on 3 times a week, 10 a.m. Pacific, 10 a.m. Pacific. This is Tuesday and Thursday. So it's a very happy event for all of us. We're all on, most of us are on live with him. And if we miss his live, then we can listen to the recording. So a lot of people, they're at work at 10 a.m. Pacific. So they just come home, get on and listen to the recording. So we'll go in. Let's find his recording from last session right here. There it is right there.
Yeah.
Okay, I'm streaming.
All right, so you're streaming. So now what you're gonna do is you want to, how many screens do you have? 1 or 2?
4.
Oh, this was James doing a little test. I thought that was funny. He was on today because he's not normally on. There we go. This is yesterday's session.
060
So
130509.
one of the things I love about what James does is he goes back and he talks us through all the trades of the day. So we'll have traded as a team. We trade in the morning together on Zoom at between 6 and 8:30 a.m. Pacific. And then what we do is we'll very often on one of our trading sessions, we'll lose a trade. No big deal. Like you lose 10 pips, you lose 20 pips, no problem. Like we made 100. So it's like, okay, that's fine. I can give up 20. I still have 80. But like why did that trade go wrong? And so almost every time one of us will say, okay, I'm going to ask James. And so we get into the go live session on the Tuesday morning or the Thursday morning, and we'll drop it in the chat. So James, I entered at such and such a time. And so he'll go back on the chart. He's like, oh yeah, okay, you entered here. Uh-huh. And he's like, oh yeah, okay, no, here's your problem. And he'll tell you why you lost the trade. So there's just nothing like that, guys. It's like a coach. You're out on the field and you get absolutely pummeled by the enemy's defenseman. And you're just like, coach, what went wrong? And the coach is like, okay, calm down, first of all. And then he walks you through what you did wrong and how to make sure it doesn't happen again, right? You need coaching so much. And I'm just so grateful and excited for James. I'm just like, wow, thank you. He is probably one of the best. He's been trading for 18 years. He actually, he was working for an accounting firm in the UK, and he started trading. He built up enough money, and he bought the company he worked for. That's what he did. And he thought, this is great. Now I own this company. This is amazing. And a year in, his wife says to him, James, I hardly ever see you anymore. Well, I mean, this company was supposed to be like our retirement, and I never see you. And so, as I recall the story, he said, you're right. And he sold the company, and now he trades for an hour or two in the morning. He only trades, I think he trades, Chris? I think it's Tuesday to Thursday. So he trades 3 days a week.
Correct.
And then is that what it is? 3 days a week?
3 days a week, yeah.
3 days a week. That's all he does. And then he educates us because he just is so passionate about trading and he loves it so much. He just needs the outlet and he just loves working with us. And you can sure tell because it's just he gets so excited as we learn things and we get those aha moments. I think it just really stokes him. So, oh, you're welcome, Isabel. My pleasure. And Dave, glad to help. Well, we are after 8 o'clock Pacific. So if we got anything else, oh, look at this, Chris. We've come down into our box here and we're consolidating.
Nice.
This could take a while.
Yeah.
That could take a little bit, but look at the divergence though, guys. I'm gonna get the box out of here so that you guys can see this. This could drop a little further yet. Divergence doesn't mean it's immediately going to turn around. Just means there's a bullet in the chamber and it wants to, and at some point it will. It may come down here, it may reject this line here. Sometimes it'll come down and it'll actually go convergent. There's a couple different types of divergence I really like, just for the more advanced people on the call with us. What I really love is where I see it the other way around, where the candles are going up and then the MACD is going the other way. And so you've got bars on the MACD that are way too big for the move that just happened. Now that's a very, very volatile bullet in the chamber. Let's just put it that way. And I love it when that happens. Yeah, we just don't have the time now to wait this out. Eventually this is going to reject and it's going to go back up and it's going to be lovely. Let's throw a fib on this Fibonacci retracement tool and let's just see where we think it's going to turn around. Oh, we're almost there, Chris. We're almost at the 618. What do you think? Shall we wait?
Yeah, it could do it. It could do it.
Yeah.
I'd really like to see that MACD curling up.
Yeah.
But you've just gotten a MACD scalper, so.
Mm-hmm. Yeah, the MACD's. It is, yeah. I mean, I certainly wouldn't trade this right now. This is just the beginnings. This is kind of like, the antelope has turned towards the predator and is now 300, 400 yards away, and it's now walking in the direction of the predator, and the predator is interested. It's not ready to pounce yet, right? But we're interested. So let's see if it breaks the 618. If it just keeps on going right through the 618, then that totally invalidates the move, and we've probably got plenty more bearish downward movement before it turns around. So I'm just going to wait and see here. We got 17 seconds left in the candle. Let's see if it rejects this 618. Oh, look at that. I want to catch it. I want to see a few more candles yet. And then I want to see it come up and cross back above this black line. And that would be where we would buy it. So we're a long ways off from taking a trade here, guys. Yeah, it looks like we've broken the 618. But we did manage to close over. Yep, this may want to go down a little bit more before it pops back up, and that's fine. So this is kind of like the, again, the tiger is sitting in the grass and the antelope is just turned around. He's walking the other direction. And then there's an elephant in the way or something. And you're just kind of like, nah, I'll wait for the next one. So you don't want to chase a trade. This one here blew right through my little box. And that's fine. No losses there at all. Didn't do what I thought, and that's fine. Let's see if we're still getting divergence. We're getting a fairly strong bars on the MACD here. Our next area of rejection would be this higher level EMA right here. So again, what you're doing is you're waiting for the rejection to happen. And when the rejection happens, you don't have to hit sell right away. What you're looking for is for it to come down and cross over this black line. The black line to flatten out. And by the time it gets down here, the black line will be flattened out, usually. And then you want to see that hopper. You want to see the blue line come below the 0 level. Right there. That's your hopper. That's your sell. That's when the system generates the arrow. See this? Signal, hopper. Right, that? See? Signal, hopper. Signal, hopper. Right there. See that? Signal, hopper. Pips. And of course, we didn't see this signal. It's a no trade. You don't trade that. So many reasons why. You got this line in the way. Sorry, not this line in the way. You've got the middle Bollinger Band pointing up. So, yeah, of course it rejected. That's what it's supposed to do when this black line is pointing up. Signal, hopper, pips, right there, over and over and over again, all day long. Man, I did most of the talking. Chris, thank you for your help, my friend.
You're very welcome.
It's great to have you with us, and look forward to trading with you in just about 10 hours from now.
You betcha. I'll be there.
Oh man, me too. Thank you, Matt, Isabel, and Dave, for being with us. It was a pleasure having you guys with us tonight. A little bit of a smaller crowd than usual. We didn't really get the word out very well about tonight, but we had a good time. We got some pips, so I'm happy. All right. Well, good night, everyone. God bless. We'll see you all again.
Thank you, Steve.
Thanks, Chris. Good night, everyone.